Hey folks, David Frost, My Strategic Forecast. You're looking at a daily chart. Oh, I'm sorry, this is Monday, June 8, 2015. You're looking at a daily chart of the SPY. We had another down day, obviously. And what we're looking at here is we're coming into, should be coming into some support. Okay, so you can see we came into this level today, 208.62, which was this line here. And let me just show you the intraday, if I can get over there. Show you the intraday and how we treated that level. So we fought that level, bounced up a little bit, and then pierced through it at the close. But that level was important. And then there's another level below. And the other level below is 207. I don't know if we get there, but if the market's going to sell one more day, I have to believe we'll get there. But there is a lot of support in this general area. And what that means is I'm going to be looking for a final leg up to begin any day now in the market. And if we don't get that, if we break lower, so for example, if we close below 207 and we confirm below, meaning a couple of days closing below 207, I'm going to begin to get concerned at something else is developing. But for now, I'm actually looking for some support in this general area, whether or not we have one more flush, a little bit lower down to the 207, maybe even lower than that. But we could certainly see a reversal off that. If we don't see that, then I'm going to start getting concerned that this was actually a top rather than one more leg up. But we're not there yet. We have a little bit of time left, but not much time. And that's been the issue, is we're running out of time. So we made this top around Memorial Day. And you remember I talked about those cycles that were converging around Memorial Day. And that was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trading days ago. Okay, so that's pretty good. Could we see a down move for the rest of this week, meaning 3 weeks in a row? Sure, we could. But that would begin to point me in the direction of something else is developing, and we're not going to necessarily see that last leg that I'm looking for. But we'll take it one day at a time, and we'll just keep talking about it every day. And every day I'm going to give you the numbers, and close above, close below type stuff. We'll know where we stand each and every day. So here's the EMini contract, and it's more of the same. We're looking for 2070, 2085, as you know. Was extremely important in my work, and I'm going to go to the hourly chart and you can see how important that was. Okay, over here 2085 bounced off of it, over here 2085 bounced off, pierced through it, came back to test it, couldn't do it, came back to test it again, couldn't do it. So the 2085 is critical. And in order for this market to get any kind of legs on the upside, we're going to obviously have to recapture 2085. So that's where we stand in the E-mini. What's the lower side? Basically it's 2070, and anything below that on a closing basis, we're getting concerned. And if we get concerned, we're going to start looking, or if we get a close below this level, we're going to start having to look. This darker green line was really a very, very important level that we shouldn't go to. And that's why I had that in there, 2035. So obviously there's some stops in the middle, but I just want you to be aware of that there could be somewhat of a vacuum on the downside if that happens. So if we wake up one morning and there's some kind of debacle in the works, there's your next real level of support. It's going to really be about 2050 and then 2035, and then there's a 2044. So I guess that's not the last line of defense, but there's numbers in between 2050, 2044, 2035. You know what? Let's put the 2044 in here because that's pretty important. Let's go. Okay. So 2044 is important. And that's pretty much all I have in the S&P. I mean, you saw what happened. The market's weak. The market's got to find a bottom or it's going to get weaker, and we're running out of time. So that's a story. But by the way, let's just take a gander at the IWM and see where we stand there, because I thought what was interesting today, even though the IWM was down, and it was down 0.5%, which isn't anything to sneeze at, maybe a touch more. But if you look at the IWM on a daily basis, it looks different than the SPY. Now, this could be a bearish wedge developing until we get through this high. But let me now bring up the SPY. Just get this in mind. You're above the moving averages and you're headed upward, right? And what does it look like in comparison to the SPY? It looks totally the opposite. So I think that's interesting to note. You can't really do anything with it. One of them is going to win. Either the SPY is going to break down and the IWM is going to follow, or the IWM is going to prevail and the SPY and the rest of the market's going to follow. And remember, the IWM is small business. It's the Russell 2000 index, so it's small business across America. And what that means is that and it's just like the NASDAQ, when money's flowing into the NASDAQ and the IWM, okay, it's people willing to take on more risk than the Dow, more risk than the S&P. So that's why we like to take note of it. It's very important. We want to see where the money flow is going. That's all we really care about at the end of the day. Where's the money flowing? We can tell where the money is flowing by the charts, but we can also tell where the money flowing is as compared to other indexes. And it's also obviously by the charts. So look, I look at the IWM and I can tell that the money is flowing differently in IWM than it's flowing in SPY, right? It's flowing out of SPY, but it hasn't been flowing out of IWM. And I was very careful there. I don't want you to misunderstand. I'm not saying it's flowing out of the SPY into the IWM. I'm just saying it's not flowing out of the IWM. There's a difference there. Okay, let's move on and talk about gold. Gold has been struggling lately. It's been a very tough trade. And what I said was that we're probably going to go down lower if we couldn't get above the 1205, 1204 neighborhood. And we did. And where are we going to find support? Well, let's talk about that. So we have a support level down in here. Okay, this is going to be, in fact, I'm going to put a line in here. I did a calculation here at 1155. That was actually spot on. 1155. Okay, that's going to be a very, very good level of support. Now, I don't know that we get there because today's close was actually decent. Let's go to the intraday chart and see what happened today. So we made a low this morning all the way down at 1168 and a half, and then we reversed, and this is actually intraday relatively bullish, but you couldn't close above this. This high was 1173.80, and you couldn't close above there. However, this is somewhat of a bullish pattern. Let's look at the hourly and see what we have. You can't really tell anything from the hourly. So all I can say is leaning on the air of bullishness, but there's nothing definitive to tell us we have a trade. If we should go higher, where would we go? I did some calculations. Hold on a second. Let me get that number. Gold. Bear with me. Gold. 1170. 1185. That's about $12 from where we are. 1185 would be a number that we should achieve on the upside if we rallied up tomorrow or Wednesday. We'll see 1185. So let's put that number in too, just so we have it. 1185. Chart's getting a little busy, but it actually helps me out too. So that's where we are in gold. There's really nothing to talk about other than upside 1185, downside if we break below today's low, then we're going to go down to 1155. And if we firm up on 1155, then that may be another shot at a long opportunity, but we won't know that for quite some time until and unless we get down there. Okay, oil. That's the USO. We don't want that. Crude oil, not much going on. It's a little weak. We were weaker earlier today, but we rebounded a little bit. And if you look at the intraday, if I can get over there, the intraday was weak and then we rebounded. It looks a lot like oil. It looks a lot like gold. We'll see if we have a little bit more upside tomorrow and or Wednesday. If we do, maybe oil can get up to about the 58.70 level. In fact, I'll put that in. I've calculated that as well. 58.70, maybe 75. But that should be a good level. In fact, I think that's a pretty good level. Good enough to where I'm actually going to make that a little bit darker. Only because it helps me out. And hopefully it helps you out too. So there's where we are there. And we should, if we get back up there, we should find a fair level of chart resistance at 58.70. 58.70 is that number. So that's only 50 cents away from where we are. Bonds. Interesting in the bond market today. And here's the actual 30-year bond. Let me make sure I have the right contract. I don't think so. I think I want to be on July. What is this? July. Is this? No, that's September. I'm sorry. I want to be on September, not July. Okay. So the reason I want to bring up the actual T-bond chart is because it looked a little bit different today, and I almost thought there was a trade here, and there still may be, but I would have been a little early had I taken it. So here's what it is. So we made a low, then we rallied up, then we came down and we made a test and a retracement, and then we started higher, and then we kind of flatlined the rest of the day. Now it looks a little bit different than TLT, and that's why I wanted to bring it up. TLT looks more flat. What you did was you rallied up and then you filled this gap, and then we'll see if we can pop over it a little bit. Now, as you know, I have a lower number on the chart down here at 115.43. I don't know if we get there or not, but if we rally right now, this could be a reasonably powerful rally for about anywhere from $2.5 to $3.5 in the TLT if we get it. And the reason I say that is because it's pretty oversold. Everybody's pretty bearish. Yields have been rising pretty rapidly of late, and they're due for a snapback, and the bonds are due for a snapback. And it's really not such a technical explanation as it is more of an observation. And I hate to make an observation and say, here's a trade, so I'm not doing that. All I'm saying is that I believe that this level is going to hold here, down here. I think this is going to hold. It's just really a gut feeling, so I'm not telling you to take a trade. I'm just saying, here's a trade. If you were going to take a trade, your low here is 117.20. You're at 117.47. Let's say tomorrow you open up above 117.20. That's a trade, and here's why. Your risk reward is rather short, rather small. So you can do a close below 117.20, preferably on a daily basis. And as long as you closed above 117.20, you stay in the trade. And if you got below and you started closing below hourly, I would move out. And it was really worth the risk reward when you're so close to the recent low. It's not a bad trade when the market's this oversold. We can get a rally at any point in time. So it's kind of where we are. It's not a technical trade setup. It's more of here's a good risk reward setup in the bonds. It just looks to me like we're due for a bounce, but I don't have here's the reason for the trade and here's why it's 80% probability it's going to work out. I don't have that, but what I do have is a low risk trade probability or setup. Not probability, setup. So anyway, there you go. The dollar. Dollar was very weak today. Let me go to this chart here. Dollar was very weak today. I'm going to get rid of these. And we're either going to, continue down and breach these lows or have a double bottom here. Remember, I said I was never convinced that this was actually a low, and I'm not convinced yet still because this was a pretty good reversal day. So the market faked us out last week, looked like it was making a low, looked like it was going to do an A, B, C pattern. It still may, but this is weak, showed weakness today. The euro was very strong, and just for kicks, I'll bring the euro over and show you that. The euro was strong, so it looks like the euro wants to move higher and maybe test this double top here. Need one more day. Don't have a trade set up in the dollar or the euro. It's just, I'm just telling you what I'm seeing. I'm telling you what's going on. So therefore, going to wait for a trade setup if one arrives, but I don't see it right here. It's just all these markets are very difficult. And by the way, so let's reel back a little bit and say, the S&P's been very tricky lately. The dollar looks like it's doing one thing, it does another. The bonds, same routine, getting very oversold. Gold acting very tricky. All these markets are not necessarily, I want to say, behaving normal, if there is such a thing as normal. However, it will clear up and we'll get some clarity in terms of what to trade when and how and why. But right now, I just want you to know that really it does seem like these markets are just a little bit more tricky than normal, and got to wait for things to clear up a little bit. And that being said, it does make more sense right now, at least from an intraday perspective for those traders out there, to trade stocks that are coming into good support levels down at these levels. When I'm expecting a low in the S&P, what I like to try and do is pick off stocks that aren't going to necessarily move large. In other words, big. Like let's give you an example. ExxonMobil. Let me just give you an example of this one. Now, I didn't take this trade, but ExxonMobil down here last week was coming into very, very good support. Let's zoom out on the chart, okay? And you see here, down here at this double bottom, we were coming down there, and I was starting to get interested. This is down here at 82.68. So I was starting to get interested on a break below around 83. It didn't get there. Where did it go? 83.78. But what you have here is you may be setting up for a lower high, right? A, B, C, and I keep talking about that, but they do play out a lot. But here, if ExxonMobil's coming into some support, and I feel the market's coming into some support, now if the market broke lower and I'm in ExxonMobil, it's probably not going to go down to $80 in a flash. So I've got somewhat of a safety net there, and obviously you can always move out. But that's one of the reasons why I like to move into stocks that are trading near some support levels, because they don't have to trade all the time in lockstep with the market. The market could be going down like today, and ExxonMobil's up 68 cents. So you can see that it's finding some support. Now, I wasn't in it, but that's the point is that sometimes our better bet is in the stocks that are at support levels, because they don't have to trade in lockstep, at least the big large cap stocks. They don't have to trade in lockstep with the major market, the S&P, the IWM, the Dow, all those indexes. So that's just food for thought idea. And let's see what else we have. So we talked about the dollar. Do we finish the dollar? Yeah, we're done with it. There's nothing to do with the dollar until, let's go back to the daily. There's nothing to do in the dollar until we get some clarity on which direction we're going. Either we have to close above this high here, which is at 97.61, or below this low here, which is 94.67. Until one of those two events happen, we're in a range. This is the low, this is the high. It's really just a range. In fact, the bigger range is here to here until you break one way or the other. So when you're in a range like this, it is a no trade. There's just nothing else to do. I'll talk about natural gas tonight only because I know some folks like to discuss natural gas, and we had a nice big update in natural gas, about 4.5%. So natural gas is way oversold, and what you did here is you made a lower high, a higher low, and there could be some more upside. How much more upside? Well, we have to see it get going. First, you have to close above 275, and today you closed at 265. So you close above 275 and you go to 279 into the 50-period moving average and then the 20-period moving average. But if you zoom out, what's really our expectation? Are we really expecting natural gas to rocket higher? I'm not. I don't see how it can unless we get some kind of I'll call it a phenomenon, some kind of a reason why natural gas is going to rally. So we had a 4.5% update today. Another day or two of nice upside momentum is certainly possible. We could normally get a 3-day rally off of a higher low like this that may take us up to $3. We'll see what happens. Hopefully that's helpful. I don't know that it is. I just don't have a definitive trade like here's what's going on in natural gas. Here's why we're going to take the trade. This is bullish on the intraday chart. This is a 10-minute. So we could see a pop first thing in the morning in natural gas. This is the 60-minute, and it is bullish. It is looking good, but it's just not a high probability setup, and that's just where we are. So I'm sorry I don't have, great high probability setups in these markets. Maybe some clarity will come into the markets tomorrow. There was such light volume, and the markets were relatively tricky the last couple of days. So we're just going to let it clear up, see what happens. This happens from time to time, and once it clears up, we should know which direction we're going. And if we just zoom out one more time, this is still, this is shortly after the close of the market. And the reason that is, and by the way, is because I've got to coach baseball for the next month, and it's just an all-star team for the next month. So I'm going to be doing the videos shortly after the close because practice begins at about 5:30 and it goes till pretty late. And then I don't want to get the videos out too late to you. You don't have to know my whole life. I know. It's just the point is I just want to let you know that it's coming out earlier than normal, and what the reason is. Whether you care or not, that's up to you. I just, full disclosure, tell you what's going on. I think we're going to give it a wrap there, and we'll just come back tomorrow and fight another day. I'm David Frost, My Strategic Forecast. Thanks for tuning in, folks, for another episode of Common Sense Market Analysis.